I believe that there are cycles and that they're extremely important to understand. I believe there always will be cycles. I have followed cycles for 50 years. I think I've been able to help our clients by dealing with the cycles. And halfway through writing the book, a thought occurred to me. Why are there cycles? That's really an important question. Why do cycles occur? If the US GDP grows about 2% a year on average, well, why doesn't it just grow 2% every year? Why sometimes 3 and sometimes 1, and sometimes 4 and sometimes negative in a recession? The S&P average of stocks returns about 50%, 10% a year on average, and it has done so now for about 90 years, almost 10% a year. Why doesn't it just give 10% every year? And in fact, if you look at the history, rarely is the return between 8 and 12. It's usually much better than 12 or much worse than 8. So why is the average not the norm? And this is a very important question to understand because in order to deal with cycles. And the answer is simple, that the positive trends in the economy or the market eventually go to excess. Remember the third stage. And those excesses correct on their own or are corrected. And so rather than thinking of the cycle in terms of ups and downs, which I always did and most people do, I think it's better to think of excesses and corrections. Excesses when things go too strong, and corrections when they go too weak. So, and why do we have excesses? Because of the involvement of people. This is not mechanics. This is not physics. This is an area where people have a very strong impact. And Richard Feynman, who was a great physicist, said physics would be much harder if electrons had feelings. We walk in this room, we turn on the light switch, and the lights go on every time. Why? Because the electrons flow from the light switch to the light fixture every time. The electrons never say, not today, I'm tired. Estoy cansado. They never go in the wrong direction. They never go on strike. And they always do what they're supposed to do. But people rarely, in my opinion, do what they're supposed to do, and especially not at the extremes. And because economies and markets are made up of people, and people have feelings, we get cycles. So, for example, positive feelings can make the directors of a company anticipate big demand and build a factory and hire workers and produce for inventory. And if they all do it at the same time, then we get a period of above average growth from the factory building and the inventory producing. And then that we have what's called an upcycle. In the market, positive investor psychology causes stock prices to grow faster than the value of companies is growing. The value of companies may grow 6, 8, 10% a year on average. But in the 1990s, for example, stocks in the US, the S&P 500, appreciated 20% a year. So the value of companies was growing like this. The price of stocks was growing like this. That's dangerous because that creates an excess.